the company saying that more people are paying on time and late payments continue to go down. That's the biggest concern from investors about this industry is how will the percentages defaults of this category compare to defaults in other categories of lending. And there just isn't enough data for investors to accurately measure those results longer term because the industry is still in its infancy. And so we're learning about the default rates as we move along, and companies like Klarna have to manage growth of new customers and growth in lending versus the default rates and quality of the customers they're reaching. So they reached 111 million consumers and 790,000 merchants, adding over 200,000 in just the past year. And so this industry is much like other financial payment services industries where it pays to have two-sided growth, because the more merchants you have that accept Klarna as a buy now, pay later method, the more consumers will be interested in joining Klarna because there's more merchants that are accepting that. And the more consumers that join and have a Klarna account, the more merchants will be interested because they want access to all of those buyers who may not make a purchase otherwise. And so this positive virtuous cycle just feeds on itself. The more consumers you add, the more merchants are interested. The more merchants are interested, the more consumers you add. And on it can go, feeding itself all the way up. I mean, if you reach the levels of Visa, there are over 4 billion Visa cardholders, or there are over 4 billion Visa cards outstanding. So here's something very important. When looking at credit losses as a percentage of gross merchandise value, they've grown over the period from 0.42% to 0.56%, but the main driver is the increased provisions for fair financing, which grew 8 basis points, while the actual loss rates remained stable over the period. So what the management team is telling investors is that if you look at the credit loss as a percentage of GMV metric, you might get concerned because that number is increasing. But when you consider that the reason for the increase is because of that interesting accounting provision where they take the credit loss provision initially and then revenue grows over time, if you remove that factor, then the actual loss rates remain stable over that time.
Click the link below to watch the full video.